What's going on, y'all? Welcome to another edition of Weeds Weekly with yours truly, Kevin Weedmark, where I'm going to break down what happened this past week. We're going to talk about this upcoming week, and we do have a holiday, one of the best ones: food, friends, family, and football. Can't get much more American than that with Turkey Day. We're also going to talk about, it's going to take all six things that I think this current administration is going to try to pull together and is going to have to seamlessly do it all at once for it to work. And then lastly, it's time to up our game. We can no longer just be real estate agents, so to speak. So I'm going to discuss that. So this past week, look, optimism is sky high. There's no doubt about it. Since post-election, optimism has been great. And I think a lot of that is just reflective of the stock market making a run, Bitcoin making a run. A lot of those things will adjust. But look, the activity on both a residential and a commercial side, a lot more people out there kicking tires, a lot more people interested in numbers and writing offers. I think the other thing it really showed this past week with data that we got was that pent-up demand is for real. Look, I said it before, 9 of the last 11 previous presidential elections saw residential sales decrease 15% across the board. We actually had existing home sales meet numbers, and I expect new home sales numbers once again to beat forecasts as well as existing home did. And what that is reflective of, if you recall, in September, we saw rates down in the low 6s to mid 6s. Everyone's closing in October. We saw an increase. The pent-up demand is real. If we can just get interest rates lower into the stable low 6s to in the 5% range, we're going to see things open up in the real estate side. And last week absolutely proved that. The other thing is the geopolitical conflict, the conflict between Ukraine and Russia obviously escalated within the last week. And unfortunately, in times of uncertainty, you will typically see people rush to treasuries, a safe haven, and get out of stocks. There's uncertainty. It didn't really happen, but what the conflict did, it kind of stabilized rates for the week. I think long-term inflation is still the biggest concern to traders. It's still the biggest concern out there overall to the Fed. And what that conflict did, it just kind of allowed us to be stable for the week. And some stability in interest rates recently is actually an encouraged thing. So although you never want to see conflict, hey, the facts are the facts. That was the result of it. So what do we have this coming week? It is a short week. And as we have experienced in the past, sometimes that can get a little bit dicey. The biggest data that's coming out this week is going to be PCE, core PCE, which eliminates food and energy, is going to give the Fed a clear indication of what's going on with inflation. As I just alluded to, long-term inflation is not only the traders' number one concern, it is the Fed's number one concern, particularly as it pertains to their perception of the incoming administration and what they're going to do with tariffs. And I'm going to get to that here in a little bit. But that is going to be the biggest concern. And what do I see? I actually see that this is not going to go in our favor. I think inflation is still very persistent. I think you have too much money, too much demand side cash flow sitting on the sidelines and being pumped into the economy from the forgiveness of student loans, etc., that we still have an inflation problem. We need to move over to more of a supply side where we're going to bring down that inflationary pressure. But that is going to be a big number that is actually, on the Fed's radar this week as they move into December 18th, which is their next Fed funds meeting for policy decisions. The other thing we're going to see is GDP. I think it's going to blow it away. I think we're going to see a very robust economy. Consumer spending has been, as we know, retail sales numbers have been great. So I don't see any change there. I think initial jobless claims just continues to move steadily along. It's going to be interesting with the incoming administration pulling back on government jobs. They've been, I believe, keeping somewhat the numbers for jobless claims, for non-farm employment numbers inflated as the government continues to grow. And I also, again, consumer confidence comes out and we're just riding the wave of spend, and we're coming into the holidays, and given the optimistic outlook, given the new administration, I don't see anything but just positive there. So what I anticipate for the week is I anticipate that rates have the ability to actually increase a little bit. It's going to be quite interesting to see as we move into this holiday and with that inflation number on Wednesday, what it really does. But I don't see a huge, the ability for a huge rate reduction this week. I think it's going to be much more of the same. If not, once again, it's going to tick a little bit higher until we get more information with regards to how this administration is going to implement its policies. Which brings me to the next one. So thinking up ahead, I like to think about and I like to analyze a lot of articles. I read a lot during the week. I read a lot over the weekend. I digest from all different angles. I search. And really what I've come up with is I believe that this current administration coming in is looking at about 6 things that they believe are going to affect the marketplace. But in order for them to be successful, they all need to work together. This isn't a one-off. So you're hearing in the media often, tariffs are going to blow it away. Tariffs are going to create inflation. But if you look at it as a total whole, I think that this could be an actual huge positive as this administration, in their eyes, tries to right the ship. So let me go through it. Tariffs. Obviously, the concern here is inflation. If you put a tariff on an incoming good, it is going to increase the price of that good. However, the one thing that a lot of people miss is how much is that going to be turned over to the consumer? If the tariff is 20%, is it 3%? Is it 5%? Is it 10% increase in that product? A lot of that remains to be seen. The other thing I think tariffs are going to do, they're going to create more opportunities for consumers to go find cheaper alternatives, and it's going to actually create more in-house in the USA growth. So overall, depending on how they're executed, tariffs might be a good thing, and they need to be part of this equation. We're going to see tax cuts, right? And I think that's great. I think this administration is going to keep the tax cuts that they put in place. They're going to keep them in place. And I don't think that it's a problem. A lot of people are saying that the government's not going to have enough money. The government doesn't have a revenue problem. The government has a spending problem. The spending needs to be corrected. The revenue is there, right? It's like the housing, right? We do not have a demand problem. We have a supply problem, right? So it's the same basic economics that are going to try and be in play with this current administration as it pertains to goods and services. Energy independence is key, right? You drive down the cost of energy, whether it's transporting goods, gas that the service guy is putting in his car, the manufacturing of goods, all the way down the list. If we create energy independence, it is only going to just spill all the way through the entire economy, and I think we can get there very quickly. The other thing is just regulatory burden, right? Releasing regulations, allowing private sector companies to just operate more efficiently. It's going to create more private sector jobs. We need to pull back on government jobs. We need to grow the private sector. That's where we're actually going to see growth, and we're going to see it in manufacturing and industrial. We need to bring things back more in-house. Once again, we need to get back to a supply side, which I think this administration is going to be very focused on, that it's a supply problem we have, not a demand problem that we have. Government spending. Look, I mean, this administration has already said that they're implementing an entire new cabinet, so to speak, DOGE, to go after government waste, really understand where we are spending taxpayer dollars, where we have potential government, not only spending, but jobs, employment that we just don't need, layers upon layers. Why do we need that? I think this is going to be a huge one. And my hope is that by eliminating this government spending, they have more revenue and they start paying down the federal deficit. Sitting at 36 trillion is not sustainable. The Federal Reserve needs to print money to pay our debt. They're devaluing the dollar. It's a huge ongoing problem unless it's addressed. That is going to be a huge department. I think overall that's going to be huge. And then I think immigration. I think controlling immigration is going to be more something that really benefits the state and local levels, right? They're the ones, the taxpayer at the state and local level is financially on the hook for helping the immigration problem that we have. So by getting it a little bit more under control from a policy standpoint, how do we handle it and so on and so forth, will give these state and local governments more money to actually balance their budgets and put those state and local agencies in a better position to serve the taxpayer. So I think overall it could potentially be a good thing. The biggest thing is, look, Are they going to be able to pull it off? Are they going to be able to implement all these things at the same time? And are there going to be bumps in the road? Absolutely. But do I think overall it's going to be a great thing in about 6 to 9 months for interest rates? I do, because I think at that point interest rates will be coming down, and I'll talk more about that next month and as I give my 2025 projections. And then lastly, I thought about, look, last year's term I said was affordability. Affordability was the biggest, was the name for the year. And you know what? Once again, it's going to be the same. With interest rates still hovering in the high 6s to 7, affordability is the biggest concern for buyers, for people in our space. So I think it's time that we need to, as professionals, move away from just being real estate agents. We need to be more of consultants. Where I'm really seeing a lot of success with some real estate agents is that's exactly what they are. So a few things. Number one, you need to know your local market like the back of your hand. And I don't mean from a data standpoint. I'm going to talk about that. You got to know your numbers in your market. What I'm talking about is you need to physically drive your car. We need to all get out. We need to look at inventory. You need to own your market. You need to have gone through every house that's for sale in your market space. You need to actually know, hey, what are the size of the bedrooms? Is that bathroom too small? What's the flow? Oh, you want a big closet? We should go see blah, 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 Deerfield. Whatever the case may be, you need to be that local expert. Somebody comes to an open house, you know every damn thing about every house that's in that zip code. You know streets, you know everything. You're going to have to actually physically put in the time to know that market. That's what a consultant would do. The other thing is you need to be knowledgeable when it comes to financing. I don't know how many agents I talk to and they've been taught in the past, I don't want to know that side. That's your side. Agreed. I totally, completely understand. But again, in order to be a consultant to your client, when you're listening and you're hearing what they're saying, when you're taking them around, showing them houses, or you hear them at an open house, knowing some financing options that are available, a DSCR loan. Oh, you were an investor. Did you know that there's this product out there? Oh, you can put down 5%. You can put down 3.5%. Did you know that the conforming loan limit is increasing? Being knowledgeable in that space and understanding how people in our space make money is something that you can now relate to your client. Become more of a consultant. They'll look at you as the expert. You're going to drive more business for yourself. And what you're going to have to do, the tip is you're going to have to sit down with a couple of us. You're going to have to sit down and say, look, take me under the hood and explain to me how people in your business make money and what you do with a loan that's coming into your system. Number 3, have a tax specialist in your Rolodex. And have a tax specialist that once they're engaging your client, they're willing to have you sit in. Again, I don't want to be a tax expert. I am not. And when I get a tax question, I clearly indicate I am not one. But I also know a little bit about taxes, how they affect your real estate, so that I can be knowledgeable, so I can talk a little bit, so I can look at and perceived as a somewhat expert in this space, and I can introduce that person and then be involved throughout that process. Again, it's all going to take a little bit more time, but as we move from just being agents to consultants to help our clients with the affordability problem, I think that's going to be where us as professionals rise to the top. And then lastly, know the numbers in your market. I can't stress how often I go talk to a real estate agent and I'll say, okay, well, what's the percentage of increase in the market here within the last 6 months as far as the median sales price? I don't know. How that's not top of mind? How is that not something right off the top of your head? And no, you can't not know it when somebody walks in and says, well, tell me what it is for that particular address. I can't tell you that, but I can tell you what it is for the zip code. You know why? Because I know this area like the back of my hand, but can I dive in and within probably an hour tell you everything you want to know about that? That is going to speak volumes. And when I'm saying about know your numbers from a history standpoint as well, right? This is a unique market, especially I'm talking now to the Austin market. It's particularly unique in the fact that we have not seen 6 months of inventory. We haven't seen a market like this. So knowing history from 10 years ago, how did it pull itself out of it? Have we seen a market like this before? How did it respond? What did it do here? Maybe you got to go outside of Austin and look at a tech hub, which Austin is now, and say, okay, that went through somewhat of a recession. How did it pull out? What was the rebound? What was the appreciation that happened once tech turned around? These are things that you got to know, that you need to think outside the box to give your clients more information then they would potentially even think they want to know, so that you are the expert and you're top of mind and you're the consultant that they want to work with. All right, y'all, I'm around all week. Happy Thanksgiving. I hope you enjoy friends, family, whatever it is you're going to be doing. I hope you have a wonderful time. Have a blessed one. Be safe. Again, I'm around. Call, text, email, whatever it is you need me. Do not hesitate to reach out. I will be working. And I'll talk to you on Friday with our wrap up. Everyone have a great rest of the week. Cheers.